In the first point, Aligarh Lockers Limited pays royalty rupees 2.50 for each lock with minimum annual rent of rupees 1 lakh. Rate of royalty is rupees 2.50 per lock and minimum rent is 1 lakh. 2 points completed. And if in any year royalty calculated on the lock manufactured and sold is less than rupees 1 lakh, it is nothing but short working. Less than 1 lakh, the Aligarh Lockers Limited is to have the right to deduct the deficiency from the royalty payable in excess of the sum of royalty in the two following year. Two following year means next 2 years. Third point, recovery of short working. For recovery of short working, two following years. Two following years means next 2 years. It is floating time. Third point is recovery of short working. And next point is in the event of strike, in the event of strike in any year, the lessee provides for the proportionate reduction of minimum rent for that year. Lessee is permitted to reduce the minimum rent proportionately. 4 points clear. First point, rate of royalty 2 rupees 50 paisa. Second point, minimum rent 1 lakh rupee. Third point, recovery of short working. Recovery of short working is in the two following years. In the two following years means next 2 years, floating period. And fourth point is regarding strike. Strike period, rent is reduced proportionately. Okay. On the basis of these 4 points, you have to prepare the royalty chart. Year and lock, number of locks. On the basis of this, you have to prepare the royalty chart. You see this. Royalty chart. In the day year column, you write the date. Year and date. 31st 12 77, 78, 79, 80, 81. These are the year and date. Output means lock. 32,000, 35,000, 46,000, 28,000, 60,000. Okay. This is the output means lock manufactured. Date, output. Then you take the rate. Rate is 2.50, first, second 2.50, third 2.50, fourth 2.50, fifth 2.50. Rate is always same, 2.50 per lock. Then royalty. Multiply the output and rate. This is 80,000. 32,000 into 2.50, 80,000. 35,000 into 2.50, 87,500. 46,000 into 2.50, 1,15,000. 28,000 into 2.50, 70,000. 60,000 into 2.50, 1,50,000. This is the royalty. Next, minimum rent. Minimum rent is 1 lakh rupee every year, and you have to revise minimum rent in the year of strike. Okay, you have to remember this point. 77, 1 lakh rupee minimum rent. Second year also 1 lakh rupee. Third year also 1 lakh rupee. But in the year 1980, there was a strike. In the year 1980, there was a strike. Therefore, according to that strike period, you have to reduce the minimum rent. In the year of strike, minimum rent is reduced proportionately. So in the year of 1980, there is a strike for 3 months. Okay. 3 months is the strike period. Therefore, working period is 9 months in a year. Working period is 9 months in a year. Therefore, you calculate minimum rent for 1980 in the below the chart. Minimum rent for 1980 is equal to minimum rent into time unit in the productive period. Productive period means working period divided by time unit in a year. How many units are there in a year? So, for the 1980, 1 lakh is the minimum rent. Working months are 9 divided by 12. 12 months are in a year. Therefore, if you calculate this, the minimum rent is 75,000. Okay. Like this, you have to calculate minimum rent in the year of strike. In the year of strike. Clear? and take this amount in the minimum rent column, 75,000. And next year also 1 lakh rupees. 1 lakh rupees is the minimum rent every year. And in the year of strike, minimum rent is reduced proportionately. Clear? And next is short working. Short working is equal to royalty minus, minimum rent minus royalty. Minimum rent minus royalty. Here it is not possible. Here also no. Here you see here, minimum rent is 75,000, royalty is 70,000. Difference is 5,000. It is not possible. Okay. Next you calculate excess. Excess is equal to royalty minus minimum rent. Here no possibility. No possibility. Here there is excess of 15,000. 1 lakh 15,000 minus 1 lakh 15,000. Here there is no excess. In the last year there is excess of 50,000. 1 lakh 50,000 minus 1 lakh 50,000. Okay. Next is SWR, recovery of short working. Recovery of short working is in the next 2 years. In the next 2 years, you have to recover. This 20,000 is to be recovered in the next 2 years, means 78, 79. Okay. 20,000 you are permitted to recover in the years 78, 79 year. In the 79, there is an excess of 15,000. You recover 15,000. 15,000. Out of 20,000, 15,000 is recovered and 5,000 is the balance. That balance is not permitted to recover in the next year. Therefore, take to the next column. Clear? 20,000. Out of 20,000, 15,000 recovered, 5,000 is irrecovered because time given is completed. Next 12,500. This 12,500 following 2 years means next 2 years. 79, 80. In these 2 years, it is not possible to recover. It is not possible to recover because there is no excess. 15,000 excess is here, but it is already exhausted. Therefore, 12,500 is not recovered in the next 2 years. Therefore, it goes to irrecovery column. 12,500. There is no excess in the next 2 years. Therefore, goes to irrecovery column. Okay. Then 5,000. This 5,000 next to 2 years. 81, 82. In the 81, 50,000 is the excess. Out of 50,000, you recover 5,000. So 5,000 shortage, that is short working, recovered in the year 81. There is no balance of short working. This is the recovery, irrecovery column. Short working, irrecovery column. You put 0 in the remaining column. Then payment is equal to royalty plus short working minus SWR. 80,000 plus 20,000 minus 0. 87,000 plus 12,500 minus 0. 1 lakh 15,000 plus 0 minus 15,000. 1 lakh. 70,000 plus 5,000 minus 0. 75,000. 1 lakh 50,000 plus 0 minus 5,000. 1 lakh 45,000. Like this, you calculate the amount. And here I'll give you the equations. You see the equation. SW is equal to minimum rent minus royalty. To calculate this column, you apply this equation. SW is equal to minimum rent minus royalty. Excess is equal to, for excess calculation, royalty column minus minimum rent column. Then payment is equal to, for payment column, royalty plus SW minus SWR. You fill in this equation, you will get the payment column amount. These are the equations you remember. Okay. Now you have to pass the journal entries. How to pass the journal entries? In the books of Aligarh Lockers, they ask to pass the journal entries in the books of Aligarh Lockers. Aligarh Lockers is the lessee. Okay. One line is nothing but 1 year. One line is 1 year. Second line, second year. Third line, third year. Fourth line, fourth year. Fifth line, fifth year. Okay. You have to pass 3 journal entries. Very simple. 3 entries. First entry is royalty account entered to a lesser account. Lesser is here Kiran. Royalty account debtor to lesser. Lesser account debtor to bank. Last P&L account debtor to royalty. Only 6 words you remember. Only 6 words. Only 6 words. Royalty account debtor to lesser. First entry. Second entry. Lesser account debtor to bank. Second entry. Third entry. P&L account debtor to royalty account. 6 words you by heart. You put 6 words, you will get 1 year journal entry. And to these 6 words, you have to join SW, SWR, SWR. You see here, if the amount is in SW column, in the first entry you debit short working. Okay, you debit in the first entry. For SWR, you credit in the second entry. SWIR, you credit in the third entry. Third entry. You see here, in the first line, there is only SW. It comes in the first entry. Short working account debtor. In the second year, only SW column. It comes in the first entry. Short working account debtor. In the third year, there is no SW column, 0. Here SWR 15,000. It comes in the second entry, 2 short working. You write this as a 2 short working and this as a 2 short working in the third entry. While writing the journal entry in the third year. Fourth year journal entry. You write 3 entries. In the SW column is 5,000. This comes in the first entry. First entry 5,000 and last entry 12,500. Okay. And in the last entry, last year, 3 entries and join this 5,000 in the second column. Okay. Join the entry and pass the entry. Remember 3 entries. First entry is royalty account debtor to lesser account. Second entry, lesser account debtor to bank. Third entry, P&L account debtor to royalty. The narration, same. Okay, you see the journal entries. Journal entries in the books of Aligarh Locus. Okay, this is the format of journal entry. Date, particular, LF, debit, credit. First, I write the date of first year end, 31st/12/77. First year journal entry, I will write royalty account debtor to royalty account debtor, short working account debtor, because SW is there. To Kiran account. Kiran is the lesser, being royalty and short working due. Second entry. You see here. First entry, royalty account debtor to Kiran. Here I joined short working because SW amount is there in the first year. Second entry, Kiran account debtor to bank account. Okay. Being royalty paid. Third entry, P&L account debtor to royalty account. Being royalty transferred. These are the 3 entries. You have to remember. If SW column, if amount is in SW, you debit short working. If amount is in SWR, you credit in the second entry. If amount is in the SWIR column, you credit in the third entry as short working. Clear? I'll write the amount. First year amounts. You take amount from the first line. Royalty, first year 80,000. SW 20,000. Total 1 lakh. Okay. You take this 1 lakh in the Kiran account. Second entry. Kiran account debtor 1 lakh. The same total 1 lakh comes to the second entry. And bank account. Bank account, you take amount from the payment column. Payment column. There is total is same. Payment is 1 lakh. Kiran is 1 lakh. P&L account debtor to royalty. You write royalty. Royalty is 80,000. 80,000 debit, 80,000 credit. This is the first year entry, 1 year entry. Like this, you pass the entry. Okay. Then second year, you see the second year. First entry, royalty account debtor, short working account debtor to Kiran account, being royalty and short working due. Here I joined the short working because in the second year also there is a SW. Royalty 87,500, short working 12,500, total 1 lakh. Okay, I take the total. This is the total of first year, first page. I'll take the same total in the next page. It is the total. And second year, second entry, Kiran account debtor to bank account, being royalty paid. Amount is, I'll write afterwards. Second entry. Third entry is royalty, P&L account debtor to royalty, being royalty transfer. This is the third entry for second year. Fill the amount. 1 lakh is the first entry amount total. Bank payment column total is 1 lakh, 1 lakh tally. Then second year royalty is 87,000. You write 87,000 debit, 87,000 credit, like this. Okay. Then third year, you write the third year date, 1979, 31st 12, 79. You write 3 entries. You write first 3 entries. Joining the short working. Royalty account debtor to Kiran account. Here short working, no, because SW is not in this year. Royalty and short working due. Okay. Kiran account debtor to bank account. Here I joined short working. You see here, 2 short working, because in the 1979 year, there is a amount in the SWR column. SWR column. Therefore, I joined this. Being royalty paid. Third entry, P&L account debtor, 2 short working, 2 royalty. You see here. Here also I joined 2 short working because in the 1979 line, in the SWIR column, there is a amount. There is a amount. Therefore, we have to write it. Okay. Third entry completed. First entry, second entry, third entry. First entry, there is no short working. Second entry, there is a short working SWR. In the third entry also, there is a SWIR. Fill the amount, the respective amounts. Royalty 1,15,000. Total 1,15,000. Kiran 1,15,000. 2 short working recovery. Recovery is 15,000. Recovery is 15,000. Bank account column total. Payment column total 1 lakh. Payment column 1 lakh. This is 1 lakh. P&L account debtor. You have to take the total of royalty and short working. Okay. This is 5,000 short working e-recovery. E-recovery column is 5,000. You see there. SWIR 5,000. Then royalty is 1,50,000. Total of these two take here. Then take the total. Total is 9,17,500. This page total. Whenever you go for next page, you take the total of previous page and take to the next page. It is 1979. Next 1979. Sorry, 1980. 1980. You can see here. Royalty account debtor, short working account debtor, Kiran account. In this year, there is short working. Remember this. 5,000 short working is there. Being royalty due. Royalty account debtor, short working account debtor to Kiran account. Okay. Second entry, Kiran account debtor to bank account. Being royalty due. Third entry, P&L account debtor, short working to a royalty. You see here. In this first entry, I joined the SW. SW is there, 1980. And in the second year, there is no short working because SWIR is 0. In the third entry, short working is there. SWIR is there. So I joined the short working. You join according to that. Fill the amount. 70,000 is royalty. Short working is 5,000. Total 75,000. You take 75,000 to next entry. Amount is 75,000. Okay. Payment is there. And you write this royalty and short working. Royalty is 70,000. SWIR is 12,500. SWIR is 12,500. Like this, you fill the amount total. And last year, royalty account debtor to Kirana account. First entry, Kirana account debtor. Royalty account debtor to Kirana account. Second entry, Kirana account debtor to short working account. Recovery is there. Recovery is there. So we write the recovery to Kirana account. To bank account. The last entry is P&L account debtor to royalty. Fill the amount, you will get the answer.